Okay, so let's start now. Uh, Today, I want to discuss about the new strategy which I call the candlestick pattern. Magic candlestick pattern. This magic candlestick pattern consists of uh, four major point, four major things that you need to consider if you want to trade this pattern. First, the trend, or let's say um, trend or momentum. Then second, the key level, and the third, reversal sign. Fourth, uh, fake out, then trade. Okay, so I'm trying to bring out my drawing tool. Actually, I want to use this today's section to explain about the strategy, so that I want you guys to go and learn, to go and start using it. Okay, I think I make the strategy. I do some compound trading using the strategy. And one thing I want to let you guys know is that any strategy I give you is not something that will give you 100% winning ratio. Okay, don't think that any strategy I give you, any strategy you have, or any strategy you know about will always give you 100% winning ratio. Not that not all the time you're going to be winning all the time, because if you're going to be winning all the time, well, that means if market is reversing from this level, it should come again to that level and reverse. Okay, come again to that level and reverse. But sometimes it break the level and still reverse, or sometimes it break the level then continue, which means you cannot expect the price, because this is, let's assume this is your strategy. You expect the price to be reversing from this level. Anytime price come, it reverse anytime, but this time it not reverse. It break it and then reverse. This time it did not reverse. It break it, return, and then still reverse. Well, you see that not all the time the market will always reverse here. So same goes to not all the time you always win your trade anytime you are using a certain strategy. Okay. So don't count that my strategy is going to give you 100% win ratio. It's just that it's going to make you have some, or make some profit in the market. Okay. So this strategy, like I said, is based on four things that you need to consider before you trade. I said the trend. Okay. I discussed about the trend, that if you can have a bullish trend. Well, go back to the trading, to our previous section that we had. I talk about trend. Okay. At times you can have a downtrend, a uptrend, a downtrend. Sometime, but this pattern, this candlestick magic pattern I'm talking about, does sometimes you don't need to find a trend. What you need is, let's say, um, a small movement, then the market just appear here and then reverse. The pattern appears here and reverse. Sometimes you need a momentum, sometimes you need a trend. Okay, so you can have a downtrend or a lower, or an uptrend. Okay, sometimes, like if you look at this chart now, when market drop, market move sideways, drop again, move sideways, uptrend, drop again, up, drop, up. Okay, you can see that these are just consolidation. Okay, and the price drop, then the market still consolidates upward. Okay, because you have a zigzag movement, the market still drop, then it still consolidate. Okay, it drop and now it still consolidate. All this consolidation is what we call correction. Okay, it's what we call correction. Then all this movement is what we call the impulsive move. The impulse move. Okay, impulsive move. The price is going down, making correction, going down. So that is how we identify a trendy market. Okay, That's how we identify a trending market. Now, the next thing that you still need to consider is the key level. There are different ways of drawing key level in the market. First, by observing the market structure. If you look at the market structure, we have a downtrend, correction, a downtrend, correction, a downtrend, correction, a downtrend. If you look at this high, the market is creating the high. Okay. Also, the market is creating the low. So we have the downtrend structure, which give us the trend line using the trend line. Okay. Also, this one also we can use the trend line. Oh, why is the market? Why is the okay? Then the downside, you can also use the trend line. Okay, you can also use the trend line. So you see how the market is respecting the trend line or bouncing from the trend line. We have the support, we have the support, we have the support, we have the support, resistance, 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 resistance. Now, if you look at it very well, when I draw this resistance, 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 or whatever, I saw the pattern. Let's say I'm having the I recognize the pattern like okay this should be the pattern, let's say 100%, but what happened here is like 60%. Okay, the pattern from here. Also, this is another new pattern which I'm going to discuss next week. Okay, which I'm going to discuss next week. Don't worry. But the major one I want to discuss again is about the pattern that reverse from the support or resistance. But this is another pattern that also reverse both of them. No, this one is not there. Yes, this is new pattern. Okay, and this one also. I'm going to discuss these three. This is another new pattern. This another, let's say another trading strategy. I'm going to discuss next week. Okay, but today I want to discuss about the magic pattern. So it's very simple to identify. Like I said, it consists of the the trend, the key level. Then if you want to draw key level, how do you draw key level? You different ways of drawing key level. You either use the trend line or use the horizontal line. Okay, you use the horizontal line to draw key level. Okay, use the horizontal line to draw key level. Okay, use the horizontal line to draw key level. Then next thing, if you want to draw key level, use the Fibonacci retracement. Oh, network is not stable. Use the Fibonacci retracement. Okay, let's assume you want to draw. If you want to draw a Fibonacci retracement, start from the high, connect to the low, then wait for the key level, the level of this Fibonacci. Wait for the price to reach the level, then place your trade. Voila. Then the next one which I want to do is the next key level, how to draw key level is using the whole number. Okay, when I talk about whole number, I'm talking about the number that end with double zero. Look at the left side here. Look at the left side here. This is a whole number. How do I know that this is whole number? When I place my cursor here, it seems that we having 0.45100. So whole number can has double zero or triple zero. Okay. While round number has 10, like 10, 20, 30, 40, 50, something like that. But whole number started from 100, 200, 300, up to, let's say, having triple zero. Okay. If you look at here, this is a whole number. Okay, because it's having the double zero, 0.45100. This also 0.45200. But if I zoom in the chart, I will be seeing some round number. Like this is a round number. Okay, this is a round number because it's having 0.45050. Okay, that's a round number. Also, this is also okay, this is a whole number. Okay, so how do you now draw your level, your key level using the whole number or round number? Let's say if you look at this area here, this is a whole number. So market reverse because this is a whole number 0.45050. That is the whole number. See how the market reacted when the price reached the whole number. Here we have resistance, right? We have resistance. We go to the left side, you see that market also is respecting the level. Okay. Okay. There's no. You have to go back and check. Where it seems the market is gone too far. So also you see that also it work here as a resistance. Price again visit the level is work as a resistance here. Let's check another chart and let's use the round number. Go on the left side, check on the left side. Make sure that you trade on round number or whole number. Uh, this is a round number here. There's a round number here, round number here, whole number here. There's a whole number here. Okay, there's a whole number. So you see that market reach this whole number and then start reversing to the downside. You look on the left side, also is a whole number. The market respect the level. You go back to check. Let's see that. Let's see. Okay, see that market also respect it, but sometimes it break. You can see here reverse from the whole number. Here also round number, whole number. The market. You can see the market sometimes play around the level. Then you can see some consolidation around the whole number and the round number. Here it work as a resistance, 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 resistance support. You can see that sometimes all these are the psychological level you should pay attention to when you are trading the market. Okay, always pay attention to when you are trading the market because sometimes you always place your trade and you lose, but you don't actually finalize why did you lose this trade. Is it because my analysis is not good, or is it because I don't know what I'm doing, or is it because the market doesn't want to me want me to win the trade? Okay, these are the questions you will be asking whenever you place your trade and you lose. Well, it does that. Let's say, for example, you place a continuation trade, like you expect the price to continue after seeing a strong candle. Wow, you say, oh wow, this is a bullish engulfing. the next candle should be green. Let me go with buyers. But fortunately, you never knew that there's a whole number here. The market touched the whole number and reversed to the downside. So sometimes you place a trade at the market and you end up losing the trade. You wonder why. Because there are so many psychological level that you have never heard about. Okay. Um, so now let's move on to the strategy I'm talking about. Yes, this strategy consists of, like I said, it consists of four major things that you need to consider. First, the bullish momentum. Okay, you must look for a bullish momentum or a bullish trend. Sometimes you will only see two candles. Okay, sometimes you see three candles. Sometimes you see two candles, but make sure that it's just like a bias ready to push the price higher. Okay, so if you look at this picture here, you see the market is moving up. We have this as a bullish trend or bullish movement. This is also a bearish trend or bearish movement. Then these are key level. A key level, like I said, can be horizontal level or a trend line, or horizontal level, a trend line, Fibonacci, whole number, or round number. So those are the ways you can find your key level. Let's assume this is my key level here. When the price reached the key level, I saw this pattern, this candlestick. Well, sometime you might not see this type of candlestick. What is the name of this candlestick? If you can, okay, let me just not waste our time. The name of this candlestick is just let's say, shooting star candlestick. I prefer using this candlestick to trade a pattern, but sometimes this shooting star doesn't appear. It's only I can only see sometimes I see a doji candlestick. Okay, a doji candlestick, and sometimes I see a spinning top. Okay, spinning top. These are the candlestick I expect, but mostly it can be a gravestone doji or a shooting star candlestick. So this is our reversal candlestick. If you don't know anything about the candlestick pattern, I'll share the video. Then you go and watch the video about candlestick pattern. Some are reversal, some are continuation. Okay, price is rising to the upside, and they reach the key level. Like I said, the key level can be drawn using the trend line, horizontal line, whole number, round number, Fibonacci. Then we saw this pattern. Okay, sometimes we place our trade and the market decided to go down whenever the price reach any key level. The price is that sometimes we see this pattern, then we say, okay, fine, guys, let us sell this trade where we expect the price to go down. And sometimes we expect also the next candle to be red. But something happen, something usually happen whenever this type of candlestick appears. And sometimes uh, let's say let me just give the rates. Let's say 70% most of the time, and something always happen around this level. Same thing goes to this support. Prices are approaching the support key level, and then we have this bearish or hammer bullish hammer candlestick. It indicate that price is ready to go up. Okay, indicate that price has uh reached the buy limit. Okay, the price is moving down, it reached the buy limit, and then it's ready to go up. Okay, what I mean by buy limit is that we are expecting the price to, let's say this is a sell limit level, we expect the price to reach this limit and they start selling. Okay, same thing goes to buy limit, expect the price to reach this limit and start buying. The price has reached the limit. The limit is what we call the key level, and then the buyers decided to start buying the market. The buyers entered the market, they decided, oh, this is the opportunity to start buying. But fortunately, when they see the price rising up, they saw this type of candlestick formed. But according to smart money concept, we also have some trader who are still ready to buy again. Yes, also some trader that is still ready to sell again. That is when I come to use the pattern. Okay, so when I see the pattern, if this key level is very strong and I saw this pattern, that means It should give me something like this. It should give me something like this. A bullish movement, when the price reach the bullish movement and then stop at this key level, uh, a shooting star candle appears at the key level and the price is ready to go down. But unfortunately, some buyers are still buying from this level here. Then the price break the level, the price break the key level. Well, you might be thinking that, oh, let us start buying. But unfortunately, I would say 80% most of the time, if this key level is very strong, market always reverse. If it's not strong, the market will continue. Okay, that's why I say key level. Always use the key level. Sometimes market reverse randomly, not on key level. But if you check it very well, it should be from a strong key level. If market reverse very strong, it should be up from it. But if the market doesn't reverse, like I said, always follow your mind. Most of our trade, if you guys observe, those of you in the forex group, most of our trade last week was based on key level. You check it out. It was based on key level. Sometimes you see the markets touch the key level and reverse immediately. Show you guys, I show you the trade, show you everything that this is a key level, the market reverse and touch the level and reverse. So sometimes key level might be weakened, okay? But what I want you to observe is that if you see any key level around this area, then you see this kind of candlestick, then the market decided to continue to push the price higher. Once the price break this key level and you saw rejection, it indicates that this candle here, this green candle, is a fake candle. It shouldn't appear. Okay, it shouldn't appear. So that means I'm going to put on the next trade. I'm going to put on. Sometimes it break the high. It break the level and continue. This that means that the key level is not strong. Okay, or the key level is weakened. But this time the key level is still holding, is strong. So definitely, according to the price structure, I expect the price to go down. Same goes to this level. The price break the key level and show a sign of reversal. Definitely, this is a buying, a selling stop, sell stop candle. That means a fake candle shouldn't appear. These are fake candles. This also is a buying stop candle. Okay, buying stop candle, buy stop candle. Those of you in forex, you should know what I mean by buy stop, sell stop. Okay, like this is a sell limit, sell limit level, and this is a buy stop candle. Okay, this is also a buy limit level, and this is a sell stop candle. The sell stop candle decided that showing or improving or telling the traders we are starting buying this trade. Let us look, we are starting selling this trade. Let us start selling. Some trader might think the next candle is going to be red because they saw this pattern here, a bearish engulfing, where they decided to start selling, but unfortunately the market doesn't go that way, move like that. But immediately you saw the next candle to be green. Okay, sometimes the green will form a very strong green or sometimes a very strong red. When it form a very strong red, it and engulf this green candle. That is when you use the bearish engulfing pattern, which means you can expect next candle to be red. Okay, same goes to this one. If the buyers entered very strongly and engulf the bearish candle here, you can expect next candle to be green. Same goes to engulf the bullish, expect the next candle to be red. So what I mean is that if you see this pattern at the key level, I call it the magic pattern. If you see this pattern at the key level, always decided to place your trade. So now, how do you trade this pattern? One, observe the market structure. The market structure is what I mean is that look for a key level using the following method: a trend line, horizontal line, Fibonacci level, whole number, round number. If you are observing the key level, the structure of the market, it should be something like this, or it should be something like this, or it should be something like this. So if the market is moving up, which means the market is creating support level and the resistance, or the market is moving sideways, is creating a horizontal level, or the market is moving down, is creating a resistance and is creating support. So when you observe the market structure, look for a key level. Key level can be used under the trend line. So for instance, if you can't find the key level using the trend line or horizontal line, you can use the Fibonacci or you can use the whole number or round number. Then wait for a reversal candlestick at the key level. This is what I mean by reversal candlestick. Market it reach the key level, it shows a sign of reversal. Okay. Then wait for buying or selling interest. This is a buying interest candle, meaning the price is expected to break the key level to fake traders into buying or selling. This is also a selling interest candle. Okay, it break the key level. It break the key level. So now the faker candle should have rejection. When you now see some rejection, that give you assurance the market is ready to reverse. So place your trade with some margin of safety to avoid late entry. Okay, so whenever you see this pattern at the key level, it indicates the market is ready to go up. Now, if you do some mathematical explanation on this pattern here, is it will look like this. Let's say you combine this green with this red, what it will still give you is if you combine this green with this red, what it will give you is a hanging man, something like this, a green candle. If you combine this green candle with this red, what it will give you is something like this, inverted inverted hammer. Okay, because the shadow, the wick here is nothing, but if the body envelope this wick, what it will show is a green body. And this body here, if you envelope this green here, so you see that the body of this green candle supersede the body of this red, definitely is going to show a wick. Okay, if the top body is red, is green, then the wick also will be green. If the top body is the top wick is red, then the body also will be red. Same goes with it. That's why the market always reverse whenever you see this short something like that. So now, when not to trade this pattern, do not trade during news or before news. Sometimes you see the market give you fake move, but it will definitely reverse. When it reverse, you might have entered a wrong trade. So it's better for you not to trade during the news or before the news. If market is full of so many weeks, do not trade. If you see so many weeks in the market, do not trade. Okay, then avoid gapped price. Then this is the most important thing. You want to place your trade next candle red. Then you saw the gap or runaway candle, the gap down, or let's say gap up. Let me just say runaway candle. It might not reverse according to how you want it to reverse. So it's better for you to stay away from such trade. Avoid gap trade. Then next thing is avoid if you're having so many doji. Okay, if there's so many doji, avoid something like that. I didn't include it. Then I said something about this note. This rate given to this strategy after backtesting is to so many times is 92%. I give this strategy 92% because I've backtested so many times. I see that this strategy keep working all the time, keep working all the time. But sometimes it fail. It depends. That means the market doesn't want to reverse or something is happening in the market and you don't understand. Okay. Then secondly, do not trade during ODC. This pattern doesn't work on ODC market. It work. Sometimes it work, but I prefer you trade this pattern on real market because ODC market can give you a a gap price, or let's say it can give you um, a gap price or weak or fake candle so many times. So it's better for you to try it on real market. Let me show you some of the trade I took on based on this trade. I took the trade here. Okay, this is the first trade here. Okay, this is my key level. Okay, this is the key level. Then market decided to go down. As the market decided to go down, it formed what we call a shooting star. Okay, reversal sign. Then this candle suddenly went up. This candle suddenly went up, indicating buying interest, but this is a key level. It break the key level, and then I'm seeing a rejection from sellers. So that is why I decided to go and see the candle that formed next was very strong. Sometimes you see a strong candle. If you check on, huh, is it AUD NZD chart, AUD AUD USD, or let me just say AUD, is it NZD USD? Go and check the chart on, let's say, 30-minute chart on NZD USD. So this pattern happened to occur at some a certain resistance level last week on Friday evening. When I saw the pattern, I shared the picture to the group that this is a sign of reversal. You can see that what happened next, the next candle that formed next was a very strong red candle. Okay, that engulf, that is when you use the bearish engulfing. Not the first time the price reached a certain key level, then you saw the candle first engulfed. No, don't use engulfing pattern like that. Okay. So even after you draw the key level, make sure you confirm that market reversed multiple times at that key level. You check on the left side here, there's a reversal sign here, a reversal candle here. And also the market also reversed by touching the level. Okay. Sometimes you see a strong candle next when you place your trade, or you see a weak candle. But I advise you place once. Okay. So that's the first trade. I think I won this trade. This is the second one. I took so many trades that day. So here, actually, this is not the pattern. I did use the pattern here, but this is another pattern I'm talking about that I'm going to explain next week. Okay. This is a key level. Okay, from the key level, I have this bullish candle, then I have this, then I place my trade. I'm going to explain this pattern next week. Okay, but first, let me finish this one first. This another, yes, look at this trade also. This is a key level. Like I said, it's not necessary that the market shows momentum. Can be a strong candle, can be one strong candle, or two strong candle, or three strong candle. But if you see on the left side, the market reverse, because also after this red, they will say a green candle, market reverse. So definitely it's a key level. And what happened next? Market decided to go down because previously there was a downtrend, a bearish momentum, and the market decided to go down. But unfortunately, the buyers quickly entered. So I call this a fake buyer's candle. Okay, a buying interest, a buying fail. So when I saw this buying fail, and if I combine this green candle with this red candle, it gave me something like a hanging man. Okay, to give me a hanging man candle. So that means the next candle should be bearish. Okay, the next candle should be bearish. Like I said, the reversal candlestick can be a, inverted hammer or a doji. But here it's, let's say a spinning top. But here it looks like a spinning top because it's having both upper and lower rejection. So we see that next candle form red. Okay. Then this next one. Okay. Actually this one is quite different. This one is quite different because I combine this momentum here as a bullish movement, a bullish trend. I combine this movement here as a bullish trend because already I'm having a key level here. There's a key level. See the market reverse multiple times. That key level. Then I saw the market also. If this is a key level, the market reverse something like this. The next market should go down, but unfortunately, buyers just enter the market. Exhaustion candle, a reversal sign, a fake candle. That is why decided to go with sellers on the next candle. Okay, so if sellers succeeded in going more down, so it's definitely that the market is going to go more down. But in this kind of situation, I don't know what happened next. But I have already took one trade, then I left the market. Then this is the next trade here. Okay, this one is quite different. One small green candle, but I took a risk by taking the trade here, but I shouldn't take the trade. I took a risk. I was supposed to wait for a bullish moment, but here we're having some downtrend. Then the market formed a pattern here below this key level. So that's why I took the trade, but it's still risky. I advise you not to do that. Already it happened here. We have a bearish momentum, and then see the pattern from here. See the market also reverse, but buyers still took over the market. Now the market is going down. So we have a key level here. Okay, I draw the key level, then I saw the market also reverse by touching the level, expecting the price to go down. Fortunately, buyers still entered to fill the gap from this high to this body, and next candle still from red. So actually, this one is quite different. Yes, this is another strategy, but I will explain that next week. This one also is no, it's not the same. This one is not the same. It's not the strategy, but I took the trade based on what I observe here. Okay. Yes, this is another strategy I will explain next week. I will explain this strategy next week. In fact, I even enjoy trading this trade using this strategy in forex because it will give you, like, I use it to confirm my entry in trading because it will give you the the, the moment you're going to enter the trade. Okay, if you see this pattern, something like this, give you the moment you're going to enter the trade. If you look at this, we have a key level here. Market is reversing. These are fake move. Then fake move candle. We saw this candle here with a rejection from this key level with a fake candle. So definitely the market is ready to go up. So if you look at it, if you check the chart, the market go up very strongly. I think AD card, check it on Friday, the market went up very strongly. So I saw the bullish momentum. So that is it. Okay. This is quite different. Though we have a weak candle, I almost lost this trade, but I took the trade here, but I still won because this is a key level. I already seen a reversal here. Market facing the level, about to reverse, but a doji dragonfly. Next was a red with a upper wick. So I expect the price to go down. So I expect the price to go down, but unfortunately the buyer entered. When the buyer entered, it's now fill the gap between this height and the body. So definitely the count is very strong. But I still go with sellers because of the strategy. I still go with sellers. So definitely sellers enter on the next candle. Let's see what happens next. This is another trade here. Okay. Okay. The key level and the fake candle, the market reverse. See that it happens most of the time. Sometimes it took me some, let's say I would just use 5 to 6 minutes before I saw the opportunity to do the trade. Okay. This one is different. This one also, this one is quite different. Okay. This one's quite different. Actually, this one is the same. This one is strategy I'm talking about. So the next candle was red. Same goes to this one. Same goes to this one. You can see, and same goes to this one. Something like that. Okay, that is the end of the trade. Okay, so this is the trading I'm talking about. So go and start learning now. Let's go to the charts. Not that it doesn't work on OTC market. It works, but not all the time because okay, the market is still bearish, and there is a round number here. The number is quite here. So let's see if the market reach the round number. Let's see what is going to happen. Nothing here. Nothing here. If this is a red candle, the next candle is green. The next candle should be red, but this is a green candle. So I'm not sure it's going to reverse. Okay, see that it's reversing here. But let's see if this is a key level or not. That's why I say before you even start trading, you must draw out your key level. Uh, Actually, level is right here. Okay, I don't know what is going on here. I didn't see any key level here. But according to the price movement here, I can see some reversal sign here. Okay, I can see some reversal sign, a support, resistance, here also support. Okay, that is why the market reverse here. Euro USD, where the market reached the key level, doesn't show anything. And if this is a red candle to fill the gap, okay, I think next candle should be green. Next candle should be green because this is a level here. Oh, I didn't know the number here. Market reach this level, make some consolidation, then break the level to the upside. Doesn't reverse. So I don't like using trading any pattern and strategy on OTC market. Nothing here as well. Okay, let's check it out one by one. Okay, here it seems the market is okay, it's still forming green candle. opportunity. See, after this next candle was red, because there's a key level. On the left side is also a round number. Okay, market is reversing here, and this is a round number. So if the next candle was green and break this round number, so we should enter the trade. That is what we call patience. It's what you need in trading. You don't have to rush. Patience is what you need. This one should go up. Uh, The reason why I said this next candle here should be green is because this is a level, a round number, a level, not a round number, a key level. Oh, my network is failing all the time. Okay, should reverse here. Doesn't reverse. Wow. And this is a key level. Okay, this is also a level, and the market reached the level, break the level. I expect the next candle to be red, but there's a gap up. There's a gap, run away candle. So many gap. Okay, we have multiple reversal here. The market doesn't want to form that pattern. If the market reverse here, let's check it out. Why? See a reversal area. Check the trend line. I think it's still a reversal area. Okay. Any bullish candle? Nope. Okay, here. Let's check this one out. If this is a a level here. Okay, still a level here. So we expect the next candle to be green, but there's still a gap. It's a gap down. It's still a gap. Avoid trading gap. Okay, it's not safe. It's not good. You can see this is OTC market. I've not even able to see the best time, the best pattern to trade the best time to trade the pattern. So that is why I don't like any strategy I'm talking about. I don't like trading on OTC. I like trading support and resistance on OTC markets because sometimes okay support here. Okay, next candle to be green. Let's check it out. 50%, 61%, 61.8% Fibo. Okay, so definitely I expect the next candle to be green. Still a red candle. Instead of green, a red candle. Well, it doesn't work. Okay, it actually work here. It's work here, but this candle is very weak. Okay, let's assume this another level. The candle break that level, should go up. But let's see. Because already we have a reversal sign here, a gap. Still unable to find the pattern. This is a gap. Red candle is still forming. So I expect buyers entry this time if there's no gap. Now, if buyers entered, assuming there's no gap, this is another level here. So if the sellers cross that level, okay, market is approaching the resistance trend line the second time. It's not reversing. I'm going to stop now because I don't see the pattern that formed every time the market always. Okay, I see something here. This is a downtrend, and okay, that's a downtrend. I expect this candle to be red because sometimes if I draw a trend line, something like this, okay, connecting this low, definitely market should go down, but we have this fake candle, so I expect the next candle to be red. Okay, it reverse. Yeah, so I expect the market to reverse because this is also a level here. Or if I extend the trend line, okay, okay, we have so many reversal points. You see the trend line, resistance here becomes support, but we saw a fake candle, okay, because this is a sign of reversal, but we saw a fake candle. So I expect this next candle to be green. Okay, a green candle, but not strong enough. Okay, I expect this next candle here to be green because after this we have next week candle. So next candle should be green. Okay, this should be green red. Okay, because of this bullish movement, a resistance. it should become a support, but a fake, no sign of bias. So if this is a red candle, the next candle after this red should be green. Okay, market did not reverse. Don't know why. Here also I expect the market to reverse, but it's still going down. Okay, it's an opportunity. No reversal. It's an opportunity here. Okay, no opportunity. Miss this. Next candle here should be green. So, but I miss. Let's see what will happen to this. A green candle breakout, and that is a key level actually. Still go down. Okay, support here. Nope. Close exactly at the same level, so it's not safe. After a downtrend at the 61.8 level, I'm seeing some reversal. So which I expect the next candle here to be green. Okay, market is reversing here. So let's pay attention to the reversal candle. Any green candle that formed, they cross the key level. So let's pay attention to that as well. I expect a green candle here. So why is it going red? Almost close as green, but close as red. Okay, let me find one more opportunity. I don't know why there's no opportunity. The market is not giving me what I want. Okay, I think there's no opportunity, so I think I should stop here for today. Okay, and you can see some reversal here. I think there's no opportunity, but okay, assuming this is a bullish engulfing, I expect the next candle to be green. Okay, it's reason why I think the market doesn't reverse the first time. It was after it formed the second candle before it reversed. Now the second candle is now a bullish engulfing. So I think the next candle here should be green. Okay, now I can see the movement here, the structure here. Okay, support, resistance. So I expect next candle to be red. Definitely close as red. This I expect next candle to be green. Okay. I think this one also should be red once it close above the level. This is the actual key level. This one wrong trade, fair trade. So if you want to use this strategy, do not trade it on OTC market. Okay, go and try it on remarket and see the difference. You see that the market respects remarket. That is how I used to. This is the pattern I use for confirmation in forex. Those of you in forex group, I use this pattern for confirmation for entry confirmation. Okay, throughout last week, I used it for entry confirmation. So go and learn how to trade, check the path, check the structure, the market structure, the candlestick pattern, the reversal sign, the key level before you use the part before you use this strategy. Okay, so I think this is almost 1 hour 30 minutes. So I think I should stop here for today. Okay. See you guys next week for another trading strategy. Good night everyone. Have a nice day. Bye bye.